Welcome back to the channel, guys. And today we are going on our pro platform, Daily Investment Advice Pro. You can check it out in the description if you're interested. But even if you don't sign up for DIA Pro, I'm just going to show you how it works. And we're going to basically have some fun today. We're going to use our stock and ETF research tool, our elite stock and ETF research tool. And we're going to find some analysis here on Affluence Corporation. And we're going to research. Now, you can type it in by the ticker symbol, or as I've done here, just to demonstrate, you can type in Affluence Corporation. And now sometimes it's not perfect, first of all. Make sure you're verifying the information based upon your own risk tolerance, investing goals, and all that. As a disclaimer, here's the, verify before acting. This is an AI-generated analysis for educational purposes only. Here's the thing. You need to make sure, because some data may be outdated, okay? But here's some information that I was able to generate. I just made this a few minutes ago, not even, like 1 minute ago, and I decided to share it with you guys out of the blue because I feel like this is important. Now, this is part of the Pro subscription. This is what you would get if you sign up for DIA Pro. It can be very helpful for pinpointing those individual opportunities, and you can even download all this information as a PDF, which I think is pretty cool. But so here we are. Successful integration of MingoThings International. You're achieving profitability through a SaaS model, and you're expanding into new geographic markets. Now, when we're looking at Affluence Corporation, keep in mind that, once again, I've mentioned this when I've talked about it on Investors Hub, StockTwits, YouTube, whatever it is. This is a great company, okay? I love this company. And I would estimate the current value. In fact, somebody else pointed out when I was on Investors Hub, they were messaging me back, and they were saying publicly on the message board, they were basically saying this could be worth over $20 million as we speak right now. So we're at a less than $2 million market cap. In fact, if you look at less than, let's just see here, AFFU, oops, let's see there it is, and $1.8 million market cap. Now, the outstanding shares, you could say, is a bloated amount of shares and whatever it is. The problem is that when you're looking at it from that perspective, you're not seeing the fact that a lot of big returns have happened previously with share structures much larger than this. So it's just one of those things that you have to keep in mind. Now, Affluence Corporation, a diversified global technology company specializing in smart city industrial IoT, or Internet of Things, and security software solutions, has demonstrated notable progress following its acquisition of MingoThings, or MTI, in May of 2025. The company reported a net income of $2.1 million for the 6 months ending June 30th, 2025, marking its first period of consolidated operations post-acquisition. And this achievement reflects operational improvements and a strategic focus on reducing derivative liabilities and high-risk convertible debt. The transition to a software as a service, or SaaS model, is expected to enhance revenue predictability and gross margins, with a gross margin of 84% reported in the third quarter of 2023. However, the company faces challenges, including a net loss of $183,000 in the same quarter, primarily due to increased investment in staff and marketing expansion. Given these factors, the investment rating is going to be a hold and a moderate confidence level of 0.85, or 85 out of 100 is the confidence interval based upon, let's say, a typical standard deviation and mean. Okay, so when we look at this, analysis based on available data up to October 20th. Now, this is October 19th, actually, so it's actually factoring 1 day in advance. If we look at successful integration with MingoThings over the next 6 to 12 months, that should produce additional revenue. Absolutely. Achieving profitability through a SaaS model, okay, fair enough. 12 to 18 months. Subscriptions and software as a service is a big industry. I think we're going that direction as well. Expansion into new geographic markets. This is a company expanding internationally, and over the next 12 to 24 months, I would expect a move in that direction. We're going to expand into different countries, different markets, and we're already seeing that happen with MingoThings, Oscar Brito, I think it's Francesc Domingo, and basically all these executive members who have already demonstrated the fact that they can generate net profitability. This last report was $2.1 million on top of tens of millions of dollars in contracts. Now, the main concern is going to be dilution. And like I said, guys, this is not perfect. So sometimes you're going to miss out, especially for these smaller cap companies, getting this financial data, even though there was a press release about it. And we can talk about that. If you come on over to news, I'll show you guys where that is. Here it is. The restructuring data for this stock. This was, information that came out publicly. Now, it's not able to generate it or extract it from the web. Okay, fair enough. But here's the thing. If we look at Affluence Corporation has shown operational improvements, including strategic restructuring, the reduction of derivative liabilities and high-risk convertible debt. Now, that is true. They've been making an effort towards that. I have not seen an official announcement. I made a video a few days ago expressing my concern about the fact that there has been no official announcement with Affluence, and ultimately Oscar Brito previously announced that there would be a debt restructuring. In fact, if you look at this press release, you'll see that they were basically expecting to make some kind of deal. And here it is, the balance sheet restructuring and capital strategy, because the problem is, in fact, this mentions the convertible debt, which is accurate. And it does mention the purpose of, liabilities, a lot of the toxic debt. It even mentions the word toxic. I've used this word as well. And for those of you guys wondering, I'm more of an activist shareholder, so I feel like I should make my voice heard. And I have, in fact, reached out to Oscar Brito and MingoThings in a very professional manner. But I've reached out to them via LinkedIn, and I've asked them to take a look at the significant dilution that we've seen as shareholders, because this is a major concern. And we have a company here that is well positioned to grow substantially. But the problem is, if we don't get this dilution under control, it's going to bankrupt and damage everything you could imagine in terms of this company. And so we don't want, I'm not saying bankrupt, maybe that's the wrong word to use, but the problem is, if we look at, a company that is already profitable based upon the most recent quarter, this information right here, in fact, it should mention the net income of $2.1 million. There it is. And then we have all these numbers that have been growing. And this is when it was factoring under 5 billion shares outstanding. Now we have over 9 billion shares outstanding. So the problem is that we are looking at Affluence Corporation being a SaaS, being a company that can very well emerge as a player in the smart city AI, or obviously we know what AI is going to do. It's already been happening. So then we have the Internet of Things and everything else happening. Smart cities are going to be massive. This is the next one, guys. Not just AI, but integrating AI into cities. That's what's going to be big. When we look at the recent acquisition of MTI and, more news coming in here and focus on SaaS offerings, and also, I think they have some kind of deal. I forget which company it is, but a large corporation. I've made a video previously about it. I just can't think of the name right now. But scenario analysis, if the risk, let's talk about the risk. That's a main consideration. If they don't integrate MTI successfully, or if the merger, the share structure keeps ballooning out of control, and your dilution risk as a shareholder is massive, even though the company might be doing well, MTI might be doing fantastic. This falls into failure to integrate. The shell is not matching up with the value of the company because of all the dilution. You're continually being diluted. So operational integration risk post acquisition, absolutely. Execution risk, including Oscar Brito and Francesc Domingo not making the best deal in terms of this convertible debt. My personal opinion, guys, they need to buy back the shares. And if you're watching this, if you're company management at MingoThings or AFFU, Affluence Corporation, corporate or executive or whatever it is, if you guys start buying back shares, it'll be seen as a major vote of confidence. I'm talking, a press release saying we're going to buy back 1 billion shares, 500 million shares. If you guys actually were to do something like that, I've seen it happen before. You guys would really make shareholders happy. And I'm telling you, that's the key here too, because we've seen so much dilution. My ownership stake has gone from less than, it was a 1.5+% ownership stake initially. Now it's down under 0.5% ownership, and that is called dilution. And we don't want dilution. That's not a good thing. So that's the most significant risk, but the execution risk falls right in line with that. I believe in the business. The business will be fine. They've proven the ability to grow. But the market competition in the smart city and Internet of Things, obviously, that's going to be something to consider as well. There's going to be a lot more players coming in here, and even though we've grown revenues, there could be some risk in terms of the future growth of those revenues, depending on how fast they can grow due to various competition and market forces. Now, financial risk related to ongoing losses and restructuring efforts. Fair enough. Absolutely. And that falls back into the share structure, dilutive debt, toxic debt, and stuff that is not good for the company. So, beyond that, we have the strategy. Well, what do we want to hold it? I definitely plan on holding it for 24 months, even 36. And my thing is, if this thing plays out over the next 24 to 36 months in some way, shape, or form, even just hitting 0.002, we're going to be talking a significant amount of money to the point where, the more shares I buy, the more leverage I have at those prices. And so a 10x or $2 to $20 million valuation, and like I said, many would argue 20 million is a fair valuation at the current price, then we would see that happening in real time. 2 to 20 million, 10x return, cash out, take the money and run sort of deal. And I would totally be open to that if that's what ends up happening. So absolutely. Regulatory review, financial statements, integration process, SaaS adoption rates, and market expansion efforts to assess performance and adjust investment strategy accordingly. For those of you guys interested, by the way, in other stocks, I've had a lot of winners on this channel. We've had TNXP stock. Now this one, has not been doing so well. I'm going to make another video about this one soon. But, ZHUD, not ZHUD, I'm sorry. We have, let's see here. That would be AZRH. So 176. Now it was down today, but look at this, guys. We talked about this one when it was under 10 cents per share. Look what happened to investors who bought now, or bought under 10 cents per share. So, and this is all free information. I was not making money from you except for the ad revenue on YouTube. I don't care about that. I love making these videos. If you bought at 10 cents or under 10 cents per share, I personally did not. I can't catch all of these. There's too many of them. But if you look at a 1,600% increase, you've gotten a 16x on your money if you would have bought under 10 cents. I think a couple of you guys actually did. So congratulations, and that's why we do this. I love making videos like this because of the fact that if, in fact, you guys hit, you guys can make a lot of money on these, and I can too. But, just somebody bought 20,000 shares, I think they said. It's worth $30,000 to $40,000 at these prices. So congratulations, you've done it. But 1,600%, guys, here we are. That's the return that we've seen on the channel. So tune in if you guys want more videos like this. And by the way, I think I may have mentioned this already. You can download this as a PDF and get this as a report. So here we are. We're going to have a hold recommendation. Like I said, it's going to have trouble pulling some of these metrics. It's not perfect, but we got an entire report for you on Affluence Corporation, a diversified technology company specializing in smart city. Just to summarize, the executive summary: industrial and Internet of Things and security software solutions, demonstrating notable progress following its acquisition of MingoThings in May of 2025. The company reported a net income of $2.1 million for the net 6 months ending June 30th, 2025, making its first period of consolidated operations post-acquisition. The achievement reflects operational improvements and a strategic focus on reducing derivative liabilities and high-risk convertible debt. The transition to a software-as-a-service model is expected to enhance revenue predictability and gross margins, with a gross margin of 84% reported in the third quarter of 2023. However, the company faces challenges, including a net loss of $183,000 in the same quarter, primarily due to increased investments in staff and market expansion. Given these factors, the investment rating is a hold with a moderate confidence level, or mean/standard deviation. We can take a look at the statistics of this closer, but that's what it is. So check it out, guys, if you're interested. Daily Investment Advice Pro in the description. If not, thank you all for tuning into this video. We just went over Affluence Corporation. The ticker symbol, once again, is going to be, let's see here, AFFU. Let's find out. This one went up over 10x, by the way, as well. So that's why we do this, guys. There's so many opportunities here, okay? And that's why I love making these videos. Now, this one is only at 0.002. This one hit the equivalent of like $200 a share, okay? So 0.002, it's a huge difference, but the concept is the same. They have millions of dollars of contracts. This company's done nothing. Now, in the last 5 days, it's gone back and forth, 0.0001 to 0.0002. That's what you get with these OTC stocks. OTC Markets Group Incorporated, it's not a penny stock, but that's what runs this, guys. OTC Markets right here, that's what runs all of this right here, okay? $600 million market cap for this company right here is running the entire OTC markets. Think about that. That's crazy, right? This one company. Now, obviously, that's just the revenue generated by OTC markets and everything factored into the valuation here, but that's insane to think about. Now, if you look at the OTC markets over the last 5 years, it looks like people are bullish. And in fact, since 2020, the OTC markets has had multiple stocks going up massively, and that's why people buy these things. It's so exciting to think about. But I want to thank you all for tuning into this video. Check out this most recent video as well. I just made this 5 gold mining stocks to buy as gold rips past $5,000 per ounce. It will happen. And it's $4,300 right now. It's going to be going past $5,000 and then $10,000 very, very soon. So thank you all for tuning in. Once again, take care out there. God bless. And we will see you all in the next one.